This topic is on Bitcoin and the new financial system. So with me is Samson, Adam, and David. Do you guys just want to do a quick intro about yourselves and what you guys are working on right now?
Who first? Me?
Let's go that way.
Okay. My name is Samson Mo. I'm the CEO of Jan3. We're a company focused on accelerating hyper-Bitcoinization, and that means accelerating the adoption of Bitcoin around the world. We work with governments, central banks, regulators, and we also developed a Bitcoin wallet called Aqua to spur grassroots adoption.
So Adam Beck, CEO of Blockstream, and Blockstream works on all kinds of Bitcoin tech from software, layer 2 wallets, hardware wallets, and so in asset management around all Bitcoin-centric things.
Hey, good morning. David Shea, co-founder of the Babylon protocol. So our protocol is on Bitcoin staking, how to take any Bitcoin holders, any Bitcoin to provide security to any proof-of-stake networks in the world. I'm also a professor at Stanford University.
Thank you, guys. So we were just discussing backstage about the current cycle, how Bitcoin's kind of been going through this size step approach. So consolidation, reprice higher, consolidation. It's the 7th one since the cycle low. So the volatility is kind of being compressed out of Bitcoin. And so we could just start with what your guys' thoughts are on the current price action and anything in terms of where you think we could be going in the short term.
You want to go first?
Who wants that one?
I mean, it's curious that there is a lot of buying that is transparent, the market knows about. So the ETF inflows are some multiple of the Bitcoin's mined every day. MicroStrategy and the other strategy companies doing a similar play are also buying 2 times plus Bitcoin mined per day. And of course, you've got the retail buyers who are dollar cost averaging and buying. And of course, the price is set at the margin, so that means somebody has to be selling. Now, if we were talking about last year, after the DeFi contagion and bankruptcies, there were some structural sellers who were sort of forced sellers, and miners who were restructuring or replacing fleets or going through a less profitable period. But I think all of that is behind us now. FTX is starting to pay out their dollars from selling Bitcoin ill-advisedly in the mid-20K range. And so anyway, so clearly somebody is selling to match this, otherwise the price would already be moving upwards again.
Yeah, so since September, as we were discussing, 1.1 million Bitcoin have been sold since September, October of last year, and it's quite incredible to see that amount of Bitcoin's been sold and the price has gone up 50%, so around 60,000 to 100,000. Obviously, with Trump's presidential win, that pinned Bitcoin on 100,000, and we're kind of been in this trading range, from about 91,000 to about 110,000. But it is quite incredible, and Samson, you're an advocate for price suppression, that it's so, as a volatile asset, that the volatility is kind of being stripped away.
Yeah.
Any thoughts on that?
Well, it seems like it's some sort of price suppression. If you look at the price movement, we kind of peak and then we stay steady and chop sideways. And it's good. You could say it's consolidation, but it just looks very manufactured. The very tight range in which you're trading at just doesn't look natural at all. And then, of course, you have dips when there's something in the altcoin world forcing capitulation, and then we get pulled down with it a bit. But overall, I would say it's okay. You just have to be patient, much like with the Bitcoin ethos. It's about the long game.
Yeah.
You're buying something to hold for the long term, not something you're trading daily. So I think it's healthy to consolidate, and then usually after some consolidation, we'll rip upwards.
Yeah, no, I agree. So if we want to go into the corporate adoption of Bitcoin, so we could discuss the public companies that are buying Bitcoin as a treasury asset. I think we've had about 25 announcements in the past few months of either thinking about Bitcoin as a treasury asset or actually doing it. And I think we should start with MicroStrategy. I think that's the most talked about stock on the planet right now. And Adam, I know you're an active trader on MicroStrategy, and so you take a really close look at the price action with it. But what are your initial thoughts with it, and anything with his strategy so far?
Well, I think last quarter or so they did a lot of ATM selling, i.e. selling shares to fund buying Bitcoin, and less convertible note selling, where in the earlier half of last year they'd been alternating, $1 billion of ATMs, $1 billion of converts. And so I think people that were kind of feeling it's time for some converts, and actually that was announced overnight.
Yes.
That they're doing a 2 billion convert, and they have a target in one of their earnings calls where they said they're aiming for 1.3 times leverage, so about 30% debt ratio.
Yeah.
And I think you said at the moment it's about 12%, so they've got scope to buy maybe about 15 billion of convertible notes to get to their debt target. But of course, they can also continue to maintain a debt ratio or leverage ratio while selling ATMs and selling more converts and maintain that target debt ratio. So we've got to assume they're going to try and get past the 500,000 Bitcoin, which takes about 21,000 more Bitcoin. So I would assume they will achieve that, in the next quarter.
Yeah, for me and a lot of the people that I've spoken to, that they've actually been orange-pilled on his Q3 earnings call back in October when he issued the 42 billion capital raise, the 21 billion of convertible notes, and the 21 billion ATM issuance. And on the market cap at the time, I think it was like 80 billion. So it was like a 50% dilution on the stock. And on that day, which was really interesting, the stock went up, and Bitcoin went down. And as we know, like dilution, that's one of the worst things for investors. But for a MicroStrategy holder, that accretive dilution, that Bitcoin per share, is something that we all kind of gravitate towards, and why we're such avid buyers of the stock. So I think that was the largest capital raise in finance history. So he's kind of, I think he's learning on the job, and just to see how much the market can take in terms of dilution, and how much capital he can actually accrete for the company.
Right. Yeah, I mean, I think it does take some getting used to for people who are used to valuing stocks, that they would not want to see too much dilution very quickly. They'd want to see the dilution, the capital raised from dilution, used to create new product lines and demonstrate enterprise value. But with Bitcoin strategy, the enterprise value is realized the next day when they buy Bitcoin, put it on the balance sheet. And so really the question is more, what do you think is the fair market MNAV, like multiple of the asset value, either the value of Bitcoin on the balance sheet compared to market cap, which is currently around 2. So based on historic average levels, I would say that it's actually quite cheap for MicroStrategy terms. And personally, my gut feel, and just some loose modeling, is that it's like long-term sustainable, because you're just looking for, once Bitcoin is like post-Bitcoinization, where Bitcoin is fully deployed, maybe not going up very fast, then the MNAV of a company like MicroStrategy actually will drop to 1 or a small multiple. And so the question is, how much Bitcoin can they accrete per share between now and 10 or 20 years? Can they double it? And given that they increased the Bitcoin per share by 73% last year, that doesn't seem particularly difficult to do with an MNAV of 2. So I would say like 3 or even higher is probably still gives you a discount versus the long-term achievable Bitcoin per share.
Yeah, it's quite incredible. And to see how the stock trades on any given day as an $80 billion market cap, it's like the top 10 most traded stock. The implied volatility on the stock outpaces any of the Magnificent 7. So he's like trying to integrate into all these different products. So obviously the third stock, which was his latest offering, which is a hybrid between the fixed income and equity. And something I wanted to discuss with you guys is like, as Bitcoiners, is to get that yield in a risk-adjusted manner. So obviously with the fixed income product that he's got, It's an $8 dividend, so the dividend percentage at the moment is given on an 8 or 10% basis. And I think we can see that people are running towards these kind of yield products. So what are your guys' thoughts on yield? Obviously, and staking, and obviously we go to David about that, but to try and find that kind of balance on a risk-adjusted basis.
I mean, in terms of what MicroStrategy is doing, it's possible because you have, even with those perpetual preferred shares, some kind of dividend, and they have the ability to pay the dividend in Class A shares. But in terms of a direct or native low-risk Bitcoin return, it's actually very, very hard to achieve a safe return on Bitcoin. And actually, the bear market a couple of years ago was partly triggered by, sort of risk taken while offering yield via Free Arrows Capital, Genesis, Gemini, BlockFi.
Which all stemmed from that GPC premium.
Right. So I mean, basically, the reason people were able to offer what was clearly unsustainable yields, but market them as sustainable, is because they're making, their strategy was they will lend unsecured to hedge funds making direct bets. It's obviously a crazy proposition, so it inevitably fell apart. But in terms of what could be achievable in a low risk, I would say something in a region of 2 to 4%, but you have to be very, very careful how you do that to avoid bringing on like custody risks and things like that.
Yeah, so David, with Babylon, you can tell the audience about it, and then in terms of how you navigate with your staking product.
Yeah, so our original concept of Bitcoin staking is the observation that staking is growing to be a very large industry in the proof of stake networks. It's a trust risk minimizing way of earning yield, staking. So we want to bring the same trust minimizing capability for Bitcoin stakers to use the Bitcoin and lock the asset to provide security and thereby earning the reward. So that's the basic observation. The reason why staking is such an important development in the past few years is because of the trust minimizing characteristic of staking.
Do you guys have any thoughts on that?
Well, I mean, the question. I mean, there are some technical risks around sort of smart contracts and bridges, and obviously staking will typically involve wrapped Bitcoin, which is effectively custodial or literally custodial in most cases. So that's kind of different risk. I think the custodians will be capable to secure the Bitcoin. But then I think the bigger question is where the yield comes from, which is kind of Alan Farrington kind of quote at this point, right? Which is, in some of the other products, I think there are some coins out there that repeat the Terra formula, paying a high interest rate, where the interest. So you would say, well, who's borrowing at 20% or 4%? And the answer is nobody. It's, they're just using pre-mined coins. So it depends per network what is done. So I don't really know the details of all of them. But that's, a concern that if there is no borrower who's naturally generating a return, then there's a question of is that return long-term sustainable, or is there a failure point where something bad will happen?
So can I respond to these two observations? Very important observation. Yeah. So a solution to the staking is to bridge the asset into a wrapped Bitcoin type asset and then stake in the network. So I think one of the key technical innovations of the Babylon protocol is that it does not involve bridging. So there's no bridging of the asset. It's natively staked on the Bitcoin chain, and the collateralization, that is the so-called slashing, is done through cryptographic means without bridging to the other network. So that reduces the bridging or custodial risk that Adam mentioned. So that's the first thing. The second thing about yield. So here, I think the focus is on providing security to proof-of-stake networks. And security is a very fundamental and important use case for the network. So the yield is coming from paying for that security. So because we think that security is central to the long-term viability of the network, so we believe also that yield will be sustainable.
I think there's a lot of, there's really no need to look for yield. Yield is sort of a fiat concept that is paired with monetary supply growth. But if you're thinking about Bitcoin as a new money, not just an asset, but a replacement for all fiat money, then you're probably better off just hodling your Bitcoin, because that will probably outperform any attempts at getting yield. If you look at historically all the problems that have been had, I'm not saying it's not possible, but like Adam has touched on it, there are risks inherent to searching for yield. So my advice is maybe just hodl.
So then moving over to more of a macro discussion, looking at the current US administration, what are your guys' thoughts on that? And then also, as we were discussing prior, any currency risk with the dollar index being quite strong, and also gold kind of pricing in a lot of uncertainty. So I think gold's up 12% this year, and that's with US yields at like 5%. So it seems like the market is demanding gold. So yeah, what are your guys' thoughts on just the current macro landscape?
Well, I think gold is sort of an indicator that Bitcoin is going to move up. That's sort of like the boomers understanding that something's afoot, and we need a safe haven. And that leads to the broader marketplace coming to that same understanding of Bitcoin, which is basically just newer gold, digital gold. But the Trump admin, I think, is better. I mean, it's not ideal because he launched the meme coin, but you have to take the good with the bad sometimes. He did free Ross. He did follow through on that promise. And there's no more aggression towards